Welcome back to DA's Seahorse Financial, your go-to resource for all things money-related. Today, we're diving into a hot topic that affects us all, inflation. With the current economic climate, inflation has become a pressing concern for many of us. You might have heard the term inflation thrown around, but what exactly is it and why is it often referred to as the new tax? And most importantly, why won't asking for higher wages help in the long run? Let's find out. Don't forget to follow our Instagram and Facebook page and subscribe to our YouTube channel and hit the notification bell for more videos. First, let's define inflation. Inflation is the rate at which the general price level of goods and services is increasing over time. And lately, we've been seeing prices rise in various sectors, from housing to groceries and fuel. It means that your money's purchasing power is decreasing. Imagine if the same amount of money you have now can buy fewer goods and services in the future. That's what inflation does. So, why is inflation often referred to as the new tax? In the current context, it's more relevant than ever. Just like taxes, inflation acts like a hidden tax that erodes the value of your hard-earned money. With the recent surge in prices, we're feeling the impact directly on our wallets. When prices rise, you end up spending more on the same goods and services, leaving you with less money for other essential expenses. It's like a sneaky tax that affects everyone. And it's not just our day-to-day expenses that are affected. Inflation also takes a toll on our savings. As prices keep climbing, the value of the money you've saved decreases over time. It's disheartening to see your financial goals getting farther away as inflation chips away at the value of your hard-earned savings. Today, it's far better to consider investing than it is to save, because as inflation drives prices higher, those higher prices on your investments result in higher income for your wallet, keeping you ahead of inflation. Now, let's address a common concern: asking for higher wages to combat inflation. During these times of rising prices, it's tempting to believe that higher wages would solve the problem. However, we need to consider the long-term implications. While higher wages can provide temporary relief by offsetting the effects of inflation, they can actually contribute to inflation in the long run. Here's how it works: when businesses are forced to pay higher wages, their production costs increase. To cover those costs, businesses often raise the prices of their goods and services. And that's precisely what fuels inflation. It becomes a vicious cycle. As prices go up, people demand higher wages, and businesses respond by increasing prices again. It's like chasing your own tail, and it perpetuates the problem. But that's not all. Asking for higher wages can have unintended consequences, especially in a competitive job market. When businesses face increased labor costs, they might need to make difficult choices. They might not be able to hire as many employees, or, in some cases, they might even have to lay off workers to maintain their financial stability. This can lead to unemployment and a decrease in economic growth, which ultimately affects everyone's standard of living. So, what's the solution? In times of rising inflation, it's crucial for governments and central banks to take action. They play a vital role in controlling inflation through various policy measures. By managing the money supply, regulating prices, and promoting economic growth, they can work towards maintaining stability and safeguarding the purchasing power of our money. Inflation, often referred to as the new tax, is a pressing issue in today's economic climate. As prices continue to rise, it's important to understand how inflation impacts our lives. Asking for higher wages might seem like a quick fix, but it can actually contribute to inflation in the long run and lead to unintended consequences such as unemployment. Instead, it's crucial for governments and central banks to implement effective measures to control inflation and protect our purchasing power. Remember, staying informed about inflation and its implications is essential for making sound financial decisions. Be sure to subscribe to our channel for more updates on economic topics. Thanks for watching. Don't forget to subscribe to our free blog for more exclusive content on our website dasafinancial.com.